Good morning, investors. You are now on KleverStock with me, Ainun Jaria, serving you the latest morning bell updates. Kicking it off with the opening bell updates from our local market. The FPM KLCI opened lower on Wednesday as the local market extended its consolidation phase ahead of key U.S. economic data. The benchmark index slipped 0.74 points to 1,602.81, struggling to break convincingly above the 1,600 psychological level, where it has hovered for the past week. Analysts said profit-taking pressure was in play following an overnight pullback on Wall Street, where the AI-driven rally paused amid fears of tech counters being overvalued. TA Securities noted that the market will likely remain in consolidation mode as investors awaited U.S. inflation figures, particularly after Federal Reserve Chair Jerome Powell signaled there may not be aggressive rate cuts ahead. Now, the firm pointed to immediate resistance at the December 2024 high of 1,644, followed by tougher hurdles at 1,684 and 1,695, while support levels are at 1,564, 1,527, and 1,490 based on Fibonacci retracement markers. Among early movers, Petronas Gas fell 18 cents to 18 ringgit and 26 cents. Tenaga Nasional slipped 6 cents to 13 ringgit and 34 cents, and CIMB eased 5 cents to 7 ringgit and 24 cents. Apollo Food also lost 10 cents to 6 ringgit and 40 cents after reporting a 34% drop in quarterly net earnings, citing weaker export sales and higher operating costs. On the upside, Hong Leong Financial Group gained 16 cents to 17 ringgit and 10 cents. Malayan Cement rose 9 cents to 6 ringgit and 40 cents, and Spritzer advanced 7 cents to 2 ringgit and 5 cents. In active trade, Express Power made its eighth market debut, up 1.5 cents at 21.5 cents, followed by Advanced Synergy rising 0.5 cent to 7.5 cents, and NextG climbing 0.5 cent to 51.5 cents. Moving on to local currency updates. The ringgit opened slightly higher against the US dollar on Wednesday as the greenback weakened after softer US economic data. At 8 a.m., the local note rose to 4.1960 or 4.2020 against the greenback, compared with Tuesday's close of 4.1985 or 4.2000. Bank Muamalah Malaysia Berhad Chief Economist Dr. Muhammad Afzalizam Abdul Rashid said the flash US Composite Purchasing Managers Index fell to 53.6 in September from 54.5 in August. He noted that U.S. firms are facing rising costs from higher import tariffs, while weak demand is limiting their ability to pass on the cost to consumers. As a result of the mixed signals, the U.S. dollar index eased 0.12% to 97.225. He added that remarks by U.S. Federal Reserve Chairman Jerome Powell suggest that Fed may not be inclined to cut rates aggressively, and therefore the ringgit US dollar is expected to remain in a tight range of 4 ringgit and 19 cents to 4 ringgit and 21 cents. SBI Asset Management Managing Director Stephen In said the market looks set for consolidation rather than fresh momentum, with traders awaiting stronger catalysts later in the week. He added that traders' focus has already shifted to next week's non-farm payrolls report, which will likely reinforce market expectations for rate cuts, a US dollar negative factor. At the opening, the ringgit was mixed against major currencies. It rose slightly to 2.8438 or 2.8480 against Japanese yen, but it eased to 5.6743 or 5.6824 versus the British pound, and inched down to 4.9572 or 4.9642 against the euro. Against regional currencies, the ringgit was firmer. It advanced to 3.2697 or 3.2746 versus the Singapore dollar, appreciated to 13.1577 or 13.1836 against the Thai baht strengthened to 251.4 or 251.9 against the Indonesian rupiah and edged up to 7.32 or 7.34 against the Philippine peso. Continuing with some local economic updates. Malaysia's inflation outlook for 2025 has been revised downward, with investment banks pointing to subdued cost pressures and weaker than expected policy impacts. MBSB Investment Bank has cut its forecast to 1.4% from 1.8%, while Kenanga Investment Bank lowered its projection to 1.5% to 1.7%. MBSB IB said the modest trend across food, non-food and core inflation showed that targeted subsidies, higher utility tariffs and the expansion of the sales and services tax had been less disruptive than expected. It added that we expect moderate inflation to continue into the later part of the second half of 2025. While we still anticipate inflation will accelerate, its pace may be slower than previously forecast. The bank highlighted that Malaysia's Consumer Price Index (CPI) rose 1.3% year-on-year in August, compared to 1.2% in July and 1.1% in June, reflecting in a gradual pickup. Core CPI increased to 2% in August from 1.8% in July, the fastest pace in 4 months, with a 0.4% month-on-month rise, the highest in February. Kenanga IB said the August CPI reading aligned with expectations, noting food prices rebounded after the SSD expansion, while housing and communication costs also climbed. CPI held steady at 0.15% month-on-month, while core inflation rose 0.37% month-on-month. The research house added that meeting its earlier 1.7% forecast would be difficult, saying CPI would need to average 0.4% month-on-month through year-end, an outcome likely under the Budi Madani RON 95 scheme. Both banks expect Bank Negara to keep the overnight policy rate OPR at 2.75% through 2025, with overall price pressures likely to remain contained. Moving on to corporate news update. Small cap stocks on Bursa Malaysia have been rallying more strongly than the broader market in recent weeks, signaling a renewed appetite for risk among investors despite persistent foreign outflows. Sentiment has brightened following clarity on the United States reciprocal tariff policy, with local buying interests driving gains in less liquid counters. TradeView Capital Fund Manager Neo Jiaman noted that since the tariff pause on April 10, the FPM KLCI has rebounded by 9.6% to trail the 9.9% rise of the FTSE Bursa Malaysia Top 100 Index, while the FTSE Bursa Malaysia Small Cap Index has surged 14% over the same period. He added that valuations are rising, with the Small Cap Index forward price to earnings multiple climbing to 12.2 times from its April low of 9.7 times, slightly above the historical average of 11.9 times. In the third quarter alone, the FPM Small Cap Index advanced 1,060.69 points or 6.9%, rising from 15,426.69 on July 1st to 16,487.38 as of September 23rd. Among the stand-up performers, Lions and Fleet Group soared from 88.5 cents to 1 ringgit and 94 cents, a jump of 1 ringgit and 5 cents to 119.2%, lifting its market value to 1.88 billion ringgit. The farm Maniaga recovered from 16 cents to 27 cents, up 11 cents or 68.8%, with a valuation of 1.74 billion ringgit. Lim Seong High Capital almost doubled, rising 73 cents or 91.3% from 80 cents to 1 ringgit and 53 cents, pushing its market capitalization to 1.27 billion ringgit. KSL Holdings climbed from 1 ringgit and 67 cents to 2 ringgit and 94 cents, a gain of 1 ringgit and 27 cents or 76%, bringing its market value to 2.93 billion ringgit. Technology counter Informia rose 53.5 cents to 73.8%, from 72.5% to 1 ringgit and 26 cents, now valued at 769.6 million ringgit. Yet, this local rally contrasts with sustained foreign selling. Bank Muamalah Malaysia Berhad Chief Economist Dr. Muhammad Azanizal Abdul Rashid highlighted that foreign net sales have already reached 16.4 billion ringgit in the first 8 months of 2025, compared to 4 billion in all of 2024. He said it is perplexing to see such outflows when our equities are trading at attractive valuations. The LPM KLCI's price-to-earnings ratio at 15.3 times, well below the long-term average of 17 times. Afghanistan added that Malaysia's macroeconomic fundamentals remain stable, with the government committed to fiscal discipline and global agencies like Moody's and S&P reaffirming a stable outlook on the sovereign rating. He pointed out that Bank Negara Malaysia has been proactive in supporting growth through measures such as lowering the statutory reserve requirement and maintaining an accommodative overnight policy rate. He suggested that roadshows with foreign fund managers could help clarity Malaysia's policy implementation and its impact on the economy, industries and companies. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Advanced Holdings Berhad has formed a long-term partnership with startup Surplus Loop to improve surplus asset management through artificial intelligence and automation. Syedhin Group Property Berhad is disposing of 2 freehold industrial plots in Kuala Kankar Tebrau, Johor Bahru for 19.3 million ringgit cash to Mid-Road Rubber Industries Sindan Berhad. Hexstar Global Berhad and Hexstar Industries Berhad via their subsidiaries signed agreements with China's Insper Enterprise Cloud Technology Shandong Co. Ltd. to collaborate on sustainable solutions in green building and agriculture industries. JF Technology Berhad 75% owned indirect subsidiary ATS Technology Services Sdn Berhad has entered into a shareholders agreement to acquire a 13% stake in California-based ATS Technology Services Inc. for $1.3. OM Holdings Ltd, dual listed in Australia and Malaysia, has closed the sale of a 60% stake in its Chinese smelting unit OM Materials Qinzhou Co. Ltd to Shanxi Xinyan Metal and Mining Co. Ltd for about 70.8 million ringgit. Now that's a wrap for Morning Bell Updates with me, Aina Jaria on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.